Welcome back to Krown's Crypto Cave. Waking up for a little bit of a later Sunday morning over here in a very bright and sunny Helsinki, Finland. Actually got a good night's sleep last night, so feeling pretty damn good. And looking at price action right now, looking like we have a few things set up perhaps for the weekly close. Realistically, the higher term time frame analysis has been more or less unchanged. So if you do want to reference yesterday's video, it's still very much relevant. However, today's video is going to actually focus a little bit more on the short term time frames so that we have something perhaps new to talk about. Anyways, most importantly, for the people in the TA program and actually even in the neophyte program as well, I'll be uploading two bonus videos. One of them is only going to be in the Neo program. The other two of them though are going to be in the TA program. Just to be 100% clear, so keep an eye out for that. They will probably be uploaded. I don't know, maybe in like a few hours or something like that. Just need to wait for a few things to go through, and then they can be yours for life. Anyways, on top of that, I do want to say that I will not be on Twitch today. I think Elsa will very likely be on Twitch. She's at Elsa69 if you want to go check her out. Probably post a link in the Discord as well. And I myself will be on my gaming channel for anyone who's interested in such things. If you like Total War or strategy games in general, definitely go check it out at Total Krown. If that ain't you, then all good. I'm not going to be mad at anyone who's not, who's not interested in that sort of thing. But if you like to support the channel, feel more than free to hang out over there, as we'll be there a little bit later tonight as well. Other than that, let's go take a look at the Krown trading application, which can be found at app.krowntrading.net and is 100% free. So what do we have right here? We do see that the open interest is literally more or less unchanged right now. Still hanging in that range between 1.5 billion and 1.7 billion. I'm still looking for a break outside of that range on the open interest, plus a breach of one of the higher term time frame levels on Bitcoin, of which same levels that we've been looking at for a while now, about 9,900 to the upside, 10,000 if you want to be more conservative, and about 8,700 or 8,800 if you want to be more aggressive to the downside. Looking for a break on that above or below those relevant levels, plus a move outside of the range on the open interest is really going to make me excited for the next big move. Multi-$1,000 move is what I do think that we're going to be looking at probably early this week, looking at historical volatility percentile. But before I get there, we should explain the top end metrics, which are literally the fucking same from yesterday to today. It's a weekend, man. It's a fucking weekend, by the way, in case you didn't know. And I just sound like a goddamn asshole right now. Apologies. Anyways, go check out the actual price action charts themselves. Looking at the daily, what I've been saying for the last few days, or the last like week or two, is that as long as Bitcoin is above, especially the yellow 21 exponential moving average and further extension, all major moving averages, and is in an uptrend, which it is, I'm not bearish on anything that looks like that. And that applies for anything, and also to the downside as well, of course. And as you can see right here, we did move up the sort of short-term initiating signal to look for some decent downside, $500 to $700 to the downside, up from 9,300 a few days ago to now 9,450. We can once again move that up to about 9,500, I believe, as that's where the 21 exponential moving average is. Or let's see, no, it's still around 9,450ish region actually. So sorry about that, my eyes deceive me, but the numbers do not, apparently. Anyways, most importantly with that, as long as Bitcoin's above that level, I'm not bearish. I'm not really looking for this to break to the downside. The problem is right now, though, is that in the short-term timeframes, Bitcoin's kind of in what I've been referring to as the fuckboy range. It's just a range of fuckery, so to speak, as anything within this range is not really helpful for resolution. And because the range is so small right now, and because the implications of breaking it to one side or the other are so big, I'm very hesitant to play any positions here that are not based off of a higher term time frame, like a daily or higher, actually, in some cases. So right now, this is a short-term range as far as I care. At 98, well, let's call it 99 to the upside. It's technically a little bit lower than that, to be fair. On a most aggressive tick, yes, I would get bullish back above that region if Bitcoin could even just take out 3 days ago on the 4th of June. If we took out the high of that day at 98, basically 9,900, I very likely would look for extension at the very least to 10,250, probably 10.5. And that's going to have a massive downstream of effects. What would make me a lot more confident, though, is if we could get either a 4-hour closure above 9,900 not a 4-hour close above 9,900, 4-hour close above 10,000 on a more conservative stance. On a more aggressive stance, I would say 9,900, yes. and then a 12-hour closure above 9,900 or a daily closure above 9,900 would all constitute upwards extension for myself, looking for continuation to at the very least 10,500, the prior spike high that we saw earlier this week, and also the last major high that we have on a weekly closure in early February right here as well. And then from there we can talk about targets or what would initiate a move to 11,500, of which it's one of three scenarios that I'm looking at right now. And because it is a weekend, well, it's very much relevant because we're going to see the weekly close later tonight at 8 p.m. Eastern time. So the three ways that I kind of constitute continuation from 10,500 to 11,500 is this in order of relevancy as well. So first and foremost, if we do have any sort of a wick above this prior high right here, wick above meaning that I don't need to see a closure above there, just need to see a higher high printed, and the high right here is 10,550 cents on stamp. Then yes, I would constitute that as continuation, and I'd look for the next major area to be hit at 11,500, of which we'll get to its relevancy maybe after this explanation. The other way that I look at this is either a daily close on a higher high above this level as well. Very likely gets it at 10,400, even above this high right here at basically the same level. Very likely gets it as well. We're splitting hairs right now. The other major one that I want to see that actually be the most important, but probably is naturally going to take more patience, is seeing a weekly close above this prior high right here in again early February, which is on a weekly closing basis only 10,150. Compare that with the 10,500 area that I was outlining earlier. So it's a lower price target, yes, but how often do you close a weekly? Well, once a week, and it's actually today. So Bitcoin perhaps will have a chance to do it. It's still $1,000 away. I'm not necessarily saying that it's going to here, but if it were, that would look pretty damn good as well. I have a feeling though we probably won't see that this weekend. I have based off of the way that CME is closed on Friday, it's looking very good. It's looking very constructive, but usually we're going to kind of stick around where CME is closed on Friday, when CME is open back up on Sunday, and then work from there. So yes, CMEs do actually open up before the weekly closes, so it could be that we just hang around here until they open up at 5 p.m. Central Standard Time, and then from there, I'm going to be asleep, so I don't, I'm not going to really, I'm just going to watch it in the morning. But overall, if things were to continue from there, theoretically, yes, you could have that. So it could work out that way. But realistically, levels right now are more important than anything else. I do think that on CMEs, it's a lot more of an obvious ascending triangle right here, which does imply a bullish reaccumulation formation, which does imply upwards continuation. From a major moving average perspective, everything looks good here as well. Golden cross is gaining more and more divergence away from each other between the green 55 and the purple 200. All major moving averages are switching into bullish posturings on the exponentials, with lower periods trading above higher periods. Also just a very good thing, showing you that the Boston algos are on the buy side. And this is not just on the daily, it's also on the 2-day as well. Having a perfect test right here. I mean, this is fucking textbook right there. Gets a golden cross, rallies up above, puts in a higher low on the 21. Beautiful. And for right now, what this last guy looks like right here at that 95.50-ish level is just a higher low. So the reason why I put a lot of emphasis on CME is because there seems to be a lot less fuckery around the signals given on that chart. And right now, there's a very obvious and easy way to kind of be judging the more aggressive upwards trend for the short term. So I need to be very careful in the way that I say that. Short term, there's a very easy identifier of pressure still being applied to the upside, is what I'm trying to say, and that creates a natural pivot right here at the last proverbial low, the prospective low at about 95.50. So as long as Bitcoin holds that, it is still pressure onto the upside immediately, and this is still constructing what looks to be a higher low right here, which is so far confirmed, but would be denied if Bitcoin either closes on a lower low below this. Again, being about 95.50-ish region, or takes out the wick low of this consolidation, which conservatively would be 93.35. Keep in mind, CMEs do have about $100 premium on price action with regards to spot. So this level right here getting taken out to the downside would really be more akin to 94.50, which 94.50 directly lines up with our short-term support area for the more immediate short-term trend. It's a mouthful again, so if you need to rewind that, all good, and hopefully I got that out properly. But overall, when I just kind of bullet down to this, 94.50, that's the big area to the downside. As long as Bitcoin's above there, I do think that we are in kind of like a fuckish range, like literally in the middle of both of these horizontals here. So it's a no trade zone for me, but I would err on the side of bullishness just because the trend is up and the trend is your friend until the end of the trend. And that's on all time frames up to almost a weekly now. So if Bitcoin were to break below 94.50, that's when I do get, at the very least, short term and maybe even medium term bearish for another extension, about $600 to $700 down to our last, or around our last low in the 8,800-ish level down here. I believe we do have a nice rising trend line connecting our last few bottoms, something like this. And that would be coming in actually a little bit higher than that now, about 8,900. So it is rising over time, to be fair, and will rise more. Or actually, we can get this a little bit more exact. It's maybe still like 8,850, but it will get to 8,900 in the next week or so. So if Bitcoin were to break below, again, 94.50, I would look for extension, very likely, extremely likely below 9,000, probably somewhere between like 87 and 88.50-ish region is where I'd be looking towards. And that's where, once again, the macro can change. Here's the thing, though. As long as Bitcoin does hold this trend line right here, which is basically just our uptrend coming in from our last spike low and in late May at about the 8,700-ish region, Bitcoin still is an uptrend. If it breaks that area, now it creates a downtrend, as we will have a lower low below this spike right here. And if that were to happen, then I would really look for a major meltdown. Okay, major meltdown's a bad way of putting that. I'd look for a significant decrease in price action, though, with at the very least extremely likely to test around 81.50-ish region right here. That's probably also a major fib. Yes, indeed it is. If I put a fib on from the ultimate high to the ultimate low of the last cycle, or sorry, not the last cycle, but the last run, we do see that that's a 382 fib right here. Also the 200 simple, also a nice historical horizontal coming in from this liquid zone breakout in early January before that massive run, and also the retest that we saw a couple times right here. Again, also a major fib as well. Now, technically speaking, there would be a measure move from this formation that could be applied. That would actually bring it all the way down to 7,500 at the 0.5. Again, good confluence there. Plus the last big breakout from this order block right here, actually at about 7,500-ish region. So that's where I do think that price action would at the very least get to if we do break below 8,700. I think that there would be a bounce right here at 8,100-ish region, but that bounce very likely gets sold into, and we see this level tagged down here. That's where I do think that a bottom could be found. However, personally speaking, I do think that we'd reach towards the 618 Fibonacci retracement down here at about 6,900. Also a good number, and just it's also historically relevant as well, coming in from this constructive behavior that we saw in early April, climbing out of the ditch on the and climbing up the wall of worry, more importantly. So though that, that's what I don't really get bearish though, again, until Bitcoin actually breaks below this level right here, and more immediately 94.50 for just a short-term move. So again, understand like the downstream effects of these, and now we can talk about the upside because it's a little bit more interesting and a little more fun. So I did talk about what I would deem as continuation to 10,500 target. That would be, again, either a 4-hour delta closure above 9,900 for more aggressive traders, 10,000 for more conservative traders, and well, yeah, I think that probably gets it, to be fair. I think 9,900 probably gets it. I think even taking out 2 days ago's high on the 3rd of June at 9,900 probably gets it as well. One of those three things, I'd be looking for continuation to 10.5. The thing with that is that because we do have an ascending triangle here, we can make a measure move to the upside as well. And a more conservative measure move would actually be pointing us towards about $1,100 or 11,100, which is very interesting because that would include, or that would not only conclude, but it would postulate that we would also have a higher high above this 10.5 high right on over here. And that's my next big area that essentially propels the next major continuation phase, or maybe not major continuation, but medium-term continuation for sure, to very likely 11,500. As you can see here, once we get to that level from a volume profile perspective, there's just nothing doing. There's just very little doing from here at 10.5 at this higher value node, which by the way, it's only high value node relative to the surrounding price action, because it just drops off the face of the earth right after that. And then same thing at 11,500, which is exactly where Bitcoin's been having its dramas for the last 2.5 years now, ever since January 2018. You can see this 50% meltdown from January 2018 from 11.5 to 6,000. Historical. Double top rejection there a month later in February. Historical. Coming back a year later in July, same rejection, same place. Historical. Month later in August, historical. And you can see from the volume profile that above that area, it thins out so much that it takes on even another major change of behavior long term. My neck is scratchy right now. It's fucking annoying. above that level as well. So that's the way that I'm looking at it right now. And that's why that area is very, 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 very interesting and historically relevant. And if we can move back above that region, then that would denote a macro change of behavior. And I just generally get bullish for moves into the deep teens and maybe even 20,000. And again, I feel weird even talking about it, to be honest with you, but not until that piece of price action is had. Again, to be very, 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 very clear. But you can see it rather easily on the weekly. You know, all of the dominoes here. So we're at a very interesting place right now because Bitcoin's gonna have a chance, but does it actually pull through? And does it pull through sooner rather than later? Well, that's what historical volatility percentile is used for. And what can we find coming in there from our 4-hour time frame? Wow, single digits right now. We are very much wound up and ready for a massive move. Bitcoin's fucking pumped up, baby. And anytime that we get down into the single digits, well, I'll just give you examples of what happens the last time we've got, or what's happened the last few times that we got down to single digits. You can see back on over here, 31st of March, before this major move from 6,000 to 7,500. Time before that was this major move from about 7,000 down to 5,800. So we're talking about more than $1,000 move right there. Example right in over here at 7,700 before spiking up to 9,000, above 9,000. So more than $1,000 move again. And more recently, this move right here from 92 all the way down to 85. So $700 move right there. So we do have enough pent up energy to really break, at the very least, a short-term range. The thing about that is that the short-term range to the upside is actually pretty damn interesting because that leads up into that 10.5 area once again. To the downside, a little bit less interesting. Even though there is a decent amount of edge on that trade, to be fair, just for my own purposes. For my own purposes, there's just a lot more support built up on the downside, so it's not as easy as like a waterfall trade there. Although things do happen fast, to be fair, but overall, right now there's edge on both sides. Historical volatility percentile says pay fucking attention, and we are on the precipice potentially, if it does go to the upside, of a pretty damn big breakout. To the downside, still a little bit further away, but trades be had along the way, again to that 8,700ish level that we spoke about. Looking at our momentum oscillators, we are going to see them turn back up here. 4-hour Stokes rejection the bearish control zone and popping back up. For now, price action will need to maintain above 96.85 in order to remain in upside posturing. So it is very, 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 very close here, and it's not fully set in stone just yet. Looking at the 3-hour, we do see the same thing essentially. 9,600 to the 9,600 will hold it with momentum to the upside still. And looking at the 2-hour, we do see 96.83 coming down right now. So we see bifurcation already, and hourly is probably gonna be the same. Yeah, hourly showing 96.85 needs to be maintained in order to pop this baby back up. So for right now, you can see that as long as Bitcoin's below essentially 9,700, momentum does start to favor at least a downside test again, and downside of the short-term range is 94.50. Is that going to be enough to actually break it? Well, we'll see what happens if and when Bitcoin price action does get there. But looking at historic volatility percentile, it is relevant to think that, yes, it very well could. So again, it's kind of like a ticking time bomb right now, and bears still very likely have the odds and probabilities in their court for today. I would imagine though, if Bitcoin fails to again break below 94.50 today, those probabilities are probably going to switch around, which we can look at later. Anyways, as far as the 12-hour go, or actually, while we're on the hourly here, you can see a nice contraction phase. You don't even need me to write this. You don't even need me to write this one in, but it's going to come to a culmination somewhere here in a couple days, probably around Monday, Tuesday, late in the day. Okay, going into the middle time frames, the medium time frames, we do see 12-hour Stokes will cross back up to the upside officially, which are not quite there just yet. If Bitcoin price action closes above 97.37 spot 30 cents. So again, kind of in the same range, a little bit higher than what we see on the very low time frames. So more importantly than anything, I do believe that because this last prior spike high here on the low time frames within this short-term range is actually higher than all those short-term momentum changes to the upside at about 97.50ish region. I'll just use that area. It's just an easier area and gets it all the same. So if Bitcoin can move back above that area, I actually would feel justified in being aggressive there. But that's my personal trading behavior. Very rarely do I get aggressive in the markets, especially as of recent times. But but I would feel justified in that metric right there. And more importantly, it would force all momentum oscillators back up to the upside, up to a 12-hour, maybe even a daily as well. Daily is technically coming down right now, but as you can see, yes, it does turn back up above 97.50-ish region, so 97.65, and again, that would kind of take out this last little hump right here. So to me, that area is very important. If you wanted to be even more aggressive than what I'm kind of postulating right now, which I don't necessarily even, this is not financial advice, I'm not a financial advisor, and I'm not saying that you should do this at all. In fact, I don't think that you should do any of this. In fact, you shouldn't even listen to me. You should turn this off immediately and leave a mean comment too. If Bitcoin moves its way back above this area right here, I look at that as continuation, very, very likely. You don't get two chances to fucking sell the high. You don't get two chances to buy the bottom. The markets ain't that generous, at least in my experience. And to come back up even within like a percentage or two of this prior high right here at about 10,000, it's unlikely to operate as like the high, so to speak, if not for anything for like a short-term move. Resiliency in this region is going to be interpreted as bullish the more sideways that it goes without breaking 94.50. That's the point that I'm making right now. Not that it can't go down, just the more sideways that it does, especially in these next like day or two, it will naturally start to gear the odds in the upside once again. Let's see, what else do we have to look at on the daily? Is there anything on the daily RSI? Pretty much neutral there. What's interesting though is the daily Joule. Daily Joule is very, very scary here for me because, as I've always been saying, anytime that I've disagreed with the Joule, I've always been wrong for almost 2 years now. And anytime that the Joule has disagreed with me, I've also been wrong. No, my point is that it did give a pretty damn good sell signal right here, and we haven't really seen any real price action spun upon that. The thing is, though, is that usually you're going to want to see CMEs open as well, and the problem with that is that CMEs open up later today, and it's kind of lining up for a sell signal as well. So I am a little bit, if there's anything saying that we're at the very least going to test back down to like 8,800, the bottom side of the of the current range, then that would be it. However, like I said, I just can't get bearish on something that looks like this as it is right now. Doesn't mean that it can't happen, but I'd still wait for like another $200 in price action to the downside before I start to really align with that side as well, and potentially take a trade in that direction. But yes, it is there, and for the people who are in the Joule, I think that that's very much relevant. But here's what I can say directly to that crew: if you are in the Joule and you're wondering, how to play a signal like this, I'm not saying that this is the only way to play the signal, but it was basically the same way as looking at the short-term range, 94.50. As long as Bitcoin's above that, it's still an uptrend even from the short-term time frame. So I don't really see any real reason to get into a short, even when like a time frame that's 1/6 of this time frame, being the 4-hour, is still technically in an uptrend. So 94.50 needs to be broken in order for me to even consider the possibility that this signal right here is going to play out. So yeah. Anyways, moving on to the 2-day, what do we see here? 2-day is looking sloppy as fuck. It's what it looks like. Yeah, looking very sloppy. Still working its way up, to be fair. I mean, it's in an uptrend, to be fair. Yes, and we could even use this 93.80 spike down here on Stamp to kind of mark off that last prior low, which I do think gets things rather well. But overall, more importantly, we do see 2-day Stokes popping back up, and they will remain to the upside as long as 2-day closures happen above 97.50. So far within the range right now, and I think that we are closing one tomorrow night at 8 p.m. Eastern time. So not tonight, but tomorrow night. Moving on from there, we do see that 2-day RSI is looking more or less constructive above the exponential. Not super conclusive in and of its own right, but you do go with the former trend until otherwise, at least in my experience. Looking at the 3-day, this one also potentially putting in a little bit of bearish divergence here. The problem with this is that this is not considered bearish divergence until we at the very least confirm this as a local high. I must be struggling with my words tremendously today because I feel like I'm chewing on everything right now. Jesus Christ, man. Fucking coffee's ruining my brain. Anyways, if this does confirm as a local high, yes, we will have major well, maybe not major, but decent bearish divergence here. But how would it confirm itself as a local high, you ask? Well, where's kind of the 10 simple moving average coming in? 94.50. if we get a close below 94.50, even on like a 4-hour or especially a 12-hour, probably does confirm a local high there. Also could wait for the low side of the spike down on this dildo at 91.35 to get taken out. I think that would be a little bit too much time. I think maybe just looking at GDAX and judging it there at 9,300 is probably good enough anyways, because 9,300 was the former low side of the short-term range, which I then moved up because I think you can just be more aggressive in this region. Either one of those two things, either a 4-hour close below 94.50 or just a wick below 9,300 essentially, probably does get it. And then yes, I would look for extension at the very least down to 8,900, 88 to 8,900 region, probably a small bounce there. Then we get to play the game of, is this a higher low, or are we getting ready for a big bad reversal? And that's when the downside becomes a little bit more attractive, in the same way that the upside is more attractive right now. Looking at momentum oscillators for the 3-day, we see that it is technically coming down right now and will remain to the downside as long as Bitcoin price action is below about 9,900. So again, that 9,900 number coming back into visual view as it does very likely get that upwards continuation, even on a wick on a short-term time frame is completely fine. I would probably think. Of course, also kind of rounding out my more bullish high-term time frame buys here, amongst other things, is well the CME's falling wedge that we saw constructed over more than a year, going back to June 2019, which was broken out in late April, retested a couple weeks ago or a week and a half ago, and so far so good. When this opens up later today, I expect to see this take another leap up above this prior high right here. If that happens, that's going to be an extra confirmation that we are going to see this play out in that fashion and very likely move our way into the bullish control zone here. There's no measure move to be made, but we can look at historical levels here, of which the low 70s looks about right. So I would be looking for a move in there again if we can make a high above this spike right here, which is quite literally right at 60 read. So looking good there. From a major moving average perspective, looks fine. From a momentum oscillator perspective, still angled to the upside and will remain to the upside as long as Bitcoin price action closes this week above 84.50. So pretty damn good. Very, 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 very generous there, I guess. And more importantly, we do see from a major moving average perspective that we are gaining divergence away from the 21 and the 55 naturally. And more importantly, later when we get a new weekly, we expect to see the 10 simple get a nice move above all these moving averages. And then we have all lower periods trade above higher periods. That's usually very healthy, especially after they had a nice cross right here with price action being sucked in and spit out to the upside, kind of supporting them again, further confirming the validity that the bots and algos are very likely on the buy side of this market, and to be considered as long as we're holding these lows right here, which by the way, where did they come in around? 8,700, the last prior low. So it does offer up a very nice natural pivot for the long-term downside at that area. Long-term downside again, propelling that next move to 8,100, probably bounce there, then 75, and then maybe 69, which personally I think would be very likely to happen if that route were to be chosen. But for right now, pressure's onto the upside, and yes, this does look a little bit innocuous right here, or sorry, not innocuous, but it looks a little bit nasty right here with the way that it's kind of selling down and creating a nice wick to the upside. But I'm hesitant until it actually breaks even the short-term range. Looking at the monthly, of course, as well. Monthly Stokes back up to the upside, rejecting the bearish control zone. Do you like that? Monthly Jewel giving you a hot or your long signal, although don't know how much to trust it. Monthly RSI is back above the exponential, looking constructive, but more so than anything else, just neutral. But as you can see right here, we can have a very nice and easy backfill down to 8,600, the open of last month. By the way, if you're in the TA program, you're going to be getting that's the video that we're actually uploading right now as a new bonus video, down to 86 or 8,700 region. That would actually look fine from a monthly perspective, and I would be looking for at the very least a bounce there. But overall, from what I'm looking at right now, you can see here that the monthly looks like it's really going to have a chance to actually change around the overall structure here, especially with another consecutive close above this prior spike high at on a closing basis, I should say. 93.50-ish region, of which we actually did close above last month, but continuation with another open and close above it on this month would further really confirm that, for still an upside bias long term. That is long term. Of course, I've been covering this quite a bit as well, and maybe this is going to be the last day that I reference it for now. What's also kind of driving up my long term bullish bias here is the accumulation distribution indicator, the net delta indicator, as we did fulfill another test down to the bottom side support of this long term trend line coming in from 20 2015 in like July or August, I think it was. Yeah, July and August actually. Connected with our 2019 lows right here, and then more recently, hey, why is this? Feels weird. More recently, our May lows at 4,400. So anytime that I see the slope change on this, it's typically going to be a macro change, macro reversal for, to the upside multiple years, to the downside usually like a year to a year and a half. Again, tells you to stay long all the way from October 2012 to basically this bull trap right here in June 2014. Changes the slope right there, as you can see, just matching it up, and goes down for the next like year and a half, at which point we see the slope change right here again, and that's when the low is actually had, and good momentum after that as well, on a monthly scale. So it does take a couple months to be fair, but hey, for the next 3 years straight up. And then what happens in 2018 on this bull trap? Well, slope changes once again and down for the next year, at which point we see it change once again in February 2019 right here, before the massive girthy green dildo party all the way to 14,000, and then the slope changes once again, actually 2 months right here in January 2020 at $10,000 before Bitcoin melted down from there to 4,400 right here, and then more recently on this current monthly, we actually did see once again the slope has changed back to positive. Don't care about the colors of these, but overall long term I would look at that as good as long as that does hold. So we are making assumptions here. Again, that's a monthly though. Doesn't mean that we can't have like short-term downside. We could very easily come back down to 88, 8,900 region, bounce there, and it wouldn't change anything of that. But below 8,700, that's where problems start to occur, to be very, very direct here. Anyway, it's already been 30 minutes into this bitch. Holy shit, what the fuck? Do I want to go for the 21 exponential moving average on the weekly as well? You already fucking know, man. You already know. Let's go take a look at probabilities. Okay, probabilities keeping the same sort of ranges as yesterday, and let's put it on current as well. I'm using 10,000 right now to be very conservative with this, but again, could I use 9,900? Probably, yeah. Probabilities are starting to collapse a little bit on each other, not so much, but a little bit from yesterday to today. We see 15.36% to the upside above 10,000 today on the next 12-hour closure, and about 24% to the downside. On a daily closure, we see 23.45% to the upside versus 31.72% to the downside. So they're coming in line with each other a little bit, but still haven't flipped, or really even all that close to flipping. I'm curious to see what the future bars looks like right now, though. I want to see how they're squeezing, and as you can see, this is actually even more important to me. The rings of the standard deviations for the historical volatility percentile with regards to price action is starting to flatten out and even take a very, very slight upwards slope here, which is good. Same thing on the 12-hour as well, I believe. No, actually, no. It's actually completely flat, maybe even a little bit down right now. But that's why short-term sideways is good for the boo laws above 94.50, as long as it doesn't break. Again, very, 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 very direct in saying that. As long as it doesn't break, otherwise, gonna have at least some short-term downside to below 9,000 again. At least in my opinion, maybe not on the same drive, but overall, 4-hour is getting incredibly tight here, so we are very much winding up for a move, which was further, obvious from looking at the historical volatility percentile on the lower term time frames, but might as well further confirm it there too. Anyways, let me go back to a lower term time frame here, and let's wrap this bitch up, send her off, and let you go about your merry way on this Sunday. And again, to the upside, for the most aggressive look, I'd be looking for a wick above 9,900. For a little bit more conservative look on this one, I'd be looking for a 4-hour closure above 9,900. Both of those would be good enough for me to target a move towards 10,500. For the very conservative out there, 10,000 on a 4-hour closure, probably good enough. Or very, very, very likely good enough. And then, yes, I'd still target the same area, 10,500, and that's where the next sort of interesting propositions can come about. By the same token, to the downside, 94.50 is still the area in question. If Bitcoin does break that to the downside, either on a 2-hour or 4-hour closure below 94.50 or a wick below 9,300, essentially, then I would target a move extension down here towards the 236 fib, also meeting and fulfilling a test of this trend line coming in from our last few lows at around 88 to 8,900 and rising over time. That's where the downside becomes interesting once again, as if we break, I'd be looking for a bounce on the first pass, but if we break that after that first pass, that's when I really start to target, moves to 81, 75, and maybe even 69 overall. So right now we're still quite literally right in the middle of the range, which means that this weekend's been more or less boring. Oh, weekend fuckery at its finest. Hey, stop looking at charts. You don't have to masturbate with sandpaper. You can just come back during the regular trading week, and more often than not, you're not going to miss all that much. But for all the trading nerds out there like myself, I'm still looking at it anyway. So you know what? You came to the right fucking place. Anyways, I'm going to sign off right there, man. I'm hungry as fuck. I need to go get a new SIM card for my phone. And I'd like to wish you well. I'd like to wish you the best. Take care, and until next time.